Okay, the purpose of this video is to show you how to do Unit 4, Activity 2, Assignment 1. I think there might be only one assignment in the activity. So the assignment associated with Unit 4, Activity 2. What I'm going to do here is I'm going to take you through each one of these transactions. And each one of these transactions involves an adjustment entry into the journal. And so we'll get into what those adjustments are and how to approach each one of them. Each one of these transactions, all 8 of them, represent a different style of adjustment. And so I'm going to break each one of these videos up by the transaction. So hopefully when I'm done with it, I should have, it won't be 8 videos in total because some of the transactions are of the same style of adjustment. So for example, 7 and 8 are both amortization with declining balances. So you basically approach them the same way. They just have different details involved with them. So all that to say, I'm going to break each one of these videos up into chunks so that hopefully you don't have to watch the entire video walkthrough just to get to one transaction. So for this one, we're going to do transaction 1. Then I'll stop the video and I will do another one for transaction 2 and so on and so forth. All right. So you're probably watching this video if you didn't quite understand the concept of adjustments or didn't quite know how to do some of these transactions. So as I go through these, I will do my best to kind of explain the logic behind these things and why we're doing what we're doing. So let's take a look at transaction 1, and we'll talk about this style of adjustment, which has to do with allocations. And the topic of this one, or the account that you might be familiar with in this one, is the supplies account. So in some past assignments, we've dealt with supplies. And as you know, our supplies are listed under the assets, and they're the things that we use to help us do our business, whatever that might be. If it's an office, supplies might be paper, pens, paper clips, toner cartridges for printers, all those sorts of things. So this transaction deals with how do you account for supplies being used up in an office, right? Because as you go along over the course of a month or a year or a week or whatever in a business, the amount of supplies you have will decrease if you guys are doing business. But it's somebody's job to keep track of that and the amount that's being spent on supplies and when it's time to buy new supplies and all those sorts of things. So the reason that we're doing an adjustment like this for supplies is oftentimes at the end of a month, say, a business will go into their supply storeroom. They'll do an inventory to see how much of their supplies are left and whether it's time to buy more or what. So that's what this transaction is all about, this first one. So the specifics of it, the supply asset account balance for December 31st was $4,000. In the supply room, it was determined through a count that only $2,750 of supplies were remaining. Make the adjustment entry for December 31st to reflect this. Okay, so basic idea here is you go at the beginning of the month, at the beginning of December, we had $4,000 worth of supplies in the closet. And then at the end of the month, we went in and we had 2,750. So the first thing that we want to determine is how much of the supplies have been used up, or what is the value of the supplies that have been used up in that month. So for that, all you would have to do is take your 4,000, which was the original value of the supplies, and you're going to subtract from that the amount that is left, or the value of the amount of supplies that are left. So we still have $2,750 of supplies. So if we take those and we just Let's see, will this do it? Nope. So I'm just going to get my calculator out. I'm sure there's a way to do it correctly in Excel, but I am forgetting how to do that. So we'll just do the old trusty calculator. So 4,000 minus 2,750 gives us 1,250. So that number, 1,250, is the value of the amount of supplies that we used up in December in this month. So that's the number that we're going to use for our journal entry. And so now the only question is, what do we put in the journal? What accounts are being affected by this transaction adjustment? So the first one, our debit, and we're going to put this down here in the supply or in the journal, is the supplies expense account, right? And this is where we account for how much we're spending on supplies as we go along in our business. So for now, we are concerned with the amount that we spent on supplies in December. And so we are going to debit our supplies expense account for $1,250. And it's a debit because remember, anytime that we have a expense account, if we're adding to an expense account, it is a debit, which of course, if you're like me, that might trip you up because the expense accounts are held over in the equity section of the balance sheet. And so if you're thinking of the balance sheet, you might go, well, if you're adding to it and it's in the equity section, it should be a credit. But unfortunately, expense accounts break that rule. Anytime that you're adding to an expense account, it's a debit. And the way that I think about that is that it is anything added to the expense account is decreasing the total value of the business equity or the amount of value that the business has. You're losing that money. And so it's decreasing the equity. And anytime that you're decreasing the equity, it's a debit. So if that helps you to think of it that way, that's great. Or if you just set up a rule in your mind that says expenses do the opposite of everything else in the equity section, that might help you too. I don't know. It's up to you to figure out how you're going to remember that. But anyway, so in the supplies expense, we've spent $1,250 on supplies this month. So that gets recorded in the supplies expense as a debit. Our other account is just going to be the regular old supplies account. And that one is under the asset category, right? And so we are reducing or decreasing the amount in our supplies account because we lost that amount of supplies. Since it's an asset and it's decreasing, that means it's going to be a credit. So 1,250 in the credit column for that one. And then just remember that your credits always need to be indented on a journal entry. So we want to just hit the indent button, or if you want to hit the space bar a few times, either way is fine with me. Just as long as you got a space up front so that we know that it's a credit. And then the third line is just like your other journal entries from previous assignments. You just have to write in a description of the transaction. So for this one, I put to record supplies used for December. And so that's it for that one. That is the supplies adjustment. And as I said, they categorize that under allocations. That's it for this video. I will pick back up in another video to do transaction number 2.